My friends, what is going on? Long time no see. This is going to be my first video of 2023. Haven't done one in I think over a month or so. So what I wanted to do is quickly just, at least my plan for this new year anyway, is at least once or twice a week, I want to upload videos where I'm looking at somewhere around, 4 to 5 different stocks that I think potentially have really good setups. I want to talk about, some different key levels, not only on, the overall market, but also some individual stocks. Everything that I'm doing is to just, provide insight and educational purposes. Also, too, on the video, if you're interested in joining my Discord, I'm going to leave a link with LaunchPass in the description if you would like to join the Discord. If you haven't done so already, please follow me on Twitter, Colin_Gladman. It's the easiest way to keep up with everything that I'm always going to be talking about, and that'll be where, I post a lot of intraday looks and different trading ideas. So, having said that, today, I want to go over SPY, I'm going to go over Apple, I'm going to go over Netflix, going to go over Nvidia, and want to take a quick little look at Tesla. And if we have time, depending on how long this video takes, might jump into some of the meme stocks as they started moving up a little bit towards the end of the day as well. So first things first, the big thing that I'm looking for on SPY, which if you follow me on Twitter, this kind of 390 to 393 range is it was a lot of resistance whenever we first came up and touched it in November, and then we got the big breakthrough. And then for about, a month to 6 weeks, it was really holding as support. So right now, we really, for bullish momentum, we really got to get on top of this kind of 390 to 393 range. Yes, we had a good push today. However, the volume was really lacking. Obviously, we've got the CPI print. This video, if you're watching in the future, is coming out on January 10th. It's a Tuesday. We've got CPI on Thursday before the market opens. So it's not surprising that you're not seeing too much volume right now. A lot of people are going to be hanging out and waiting to see what that print is going to look like. I believe the expectations for it are 6.5% on the CPI report. So we'll see what that. No matter what, it comes out an hour before Thursday. If it's a good print, you're going to see a huge, you're going to see those big crazy boom candles. And if it's a bad print, if it doesn't meet expectations, then you're going to see a pretty large dump. So I would imagine SPY for the most part tomorrow is going to kind of trade inside this range, maybe slightly above it, maybe slightly below it, but somewhere in that ballpark, getting ready for CPI. Now, once again, those of you that follow me on Twitter know that overall, I've definitely been a bear on this market overall. And the big reason is we're going to have to clear, essentially this, big bearish trend line, which, the last two tests haven't even come and made it up before we've done it. Also, too, anytime we've had kind of these bear rallies, if you will. So overall, the picture is bearish, but we had those small rallies along the way. Nothing just goes straight up or straight down in the stock market. I've shown this before, but it's been, I don't know, probably a couple months since I did it last. But if you use your inverse fibs and you go from your high to your low that was back here in February, none of these bear rallies have even crossed the 786 retracement. So this one got between the 707 and the 786 before you saw the next leg down. And then if we do that from here, this run before the summer rally, then basically got kicked off exactly at the 707. So now if we take that same fib and we put it from the high that was the summer rally to the low that was back in October, once we've already gotten kicked off the 707, then we got kicked off again, essentially made like a little double top right here. So, it's gotta, you would need to curl up, and I'll draw it out for you guys, but what you'd be looking for is, where's the little brush tool? So you'd want to curl up, and you got to break, this trend line. You got to break, then retest, and then see a continued push up to really believe that the bottom is in. If not, what you would be looking for is, and maybe it's CPI that sends us for one more leg down to kind of that 330 range. I am really personally hoping that somewhere between Q1 to maybe Q2 at the latest, we really start to see some bottoming effects. But it's really not until the Fed commits to just no more rate hikes. Is really when I think we're gonna really start to see a bottom forming. I've been telling my Discord, regardless, I think even buys that you've made, back in here, even if you're underwater in them right now, unless you truly believe that November of 21, or excuse me, January of 22, was the all-time high on SPY. I think years down the road, I think you're gonna be fine and happy with your purchases, but it's going to take some time. I also talked today on Twitter how right here on SPY, we could kind of be making sort of a head and shoulders look if kind of this shoulder forms and then CPI sends us down. Definitely a possibility. So I definitely think we're going to get a lot of market direction. Plus a lot of the banks have their earnings coming up on Friday as well. So that potentially could compound the problem if the CPI print is bad. Overall, like I said, this is still a very bearish look overall, and until we really clear some of these key levels, you've got to play the hand that you're dealt, so to speak. Now, this is obviously a very macro look, so I'm not talking about micro. So if SPY goes up to 395 tomorrow, it's not, oh, he was wrong, don't know what he's talking about. Like I said, this is the very big picture look, if you will, when it comes to SPY. So it's just like I said, it's got to get over this 390 to 393 range, and I would like to see the volume pick up. If it's a low volume pump, so if it's continues this push up and the volume keeps declining, then overall that's not going to be a good look. That's definitely not what you're looking for. So I mean, you can clearly see we got kicked off here. Futures actually look pretty decent right now. From a future standpoint, you gotta right here, you gotta kind of clear this 3950, which where you got the big kickoff last time. So futures, you want to see it, you want to be able to see the continuation through this 3950 range. You did have what looked like a very bearish pennant, but you got to break to the upside. Then you tested, you found support right here at the 382 at 3907, and then you saw a continued push up. So now you got to get the breakthrough here. Like I said, it's from a bearish standpoint, you would look at it, is it going to make kind of a double top and then come down? Bullish standpoint would be pushing through above, creating a base, then coming up towards the 236 around that 4,000 range. On Apple, so let's move on to Apple. So it had this long support from its summer low that broke. It broke through here, and then it retested. I bought puts up here at the retest, and then it's gotten a nice push down. Now what you're looking at is, it's kind of created a little bit of a double bottom here, and now you're getting a push up. For me personally, it's really all about, can Apple stay above these June lows? If Apple can't stay above these June lows, which is basically right around 129, then it's overall the picture is going to be very bearish on Apple. But if it can stay above in base, it's gone through such a recent beat up that if the CPI print is a really good print, this one could see a whole lot of upside. I mean, you could basically get back up here into the 140s relatively quickly with a good overall inflation number. So that's kind of what I'm looking at Apple right now. See if there's anything really to talk about from a intraday look. Not really too much here. I was kind of looking at this earlier today. It's kind of like a really sloppy looking head and shoulders, but that didn't play out. I mean, obviously it started ripping up towards the end of the day. This is where I posted on Twitter that it was kind of below and kind of chopping. I thought, most likely was going to be, a little bit of a push down towards the end of the day, but overall the entire market kind of moved up. So, Apple as of right now does look good for, overall continuation, and then it's got to get back above that trend line that it was. I mean, you can see the clear rejection that it got last time it ran into that trend line. If we take it from a swing high to swing low right here. So yeah, kind of around that 131. That's going to be Apple's next big test to see if it can make it through that. I mean, you can see it got kicked off at the 707 right in here. So it's definitely got some overall work to do. So Apple to me is kind of one of those short-term, potentially bullish, but more macro picture is looking a little bit more bearish. I mean, they're obviously having trouble with everything that's been going on with China, looking to move their production, all that good stuff. So, I think 120 could be coming up with a bad CPI print. 120 is going to be a pretty logical, price target, right in here. So that 120, 122, I think could come relatively quickly if CPI overall is bad. Just checking some EMA. So you did get a 4-hour cross up on your 921 EMA, and so like I said, it does look good short term for sure. What you'd want to see is if it is going to break back above this trend line, you definitely want to see a good volume push to get back in that trend line. But Apple's going to be a great play with a good CPI print. Netflix, God, this one has been so crazy. So I was tracking a rising wedge. Like I said, I posted this one on Twitter, but I was kind of tracking this rising wedge right here. And I got puts right towards the top of the rising wedge. I got 310 puts. And then the very next morning, it gapped all the way down to like 309. It's just crazy. I guess it actually gapped down to 311, but then dropped to 309. And I told my guys in the Discord, like, listen, I'm taking profits on this as soon as it opened. They opened up like 30% green. I took profits on it, and thank goodness, because it just absolutely ripped all the way up to 330 today, 329.50. Netflix was just on a rocket ship, and overall, like I said, on Twitter, the biggest concern was the volume wasn't dropping off on this, but Netflix, from a daily standpoint, getting to some very key levels, as well as they've got earnings coming up as well. So if you're looking to play this, if Netflix is sitting right here at the top, heading into earnings, that might be the catalyst that really, pushes it on through. Or it might be if earnings don't look well, but they've had some great shows coming out. Like Wednesday was like, one of the most watched shows. This past earnings, they had great numbers, probably largely based off of everything Stranger Things related. So, and it really gapped up and has pushed since then. Back, I don't know, it's like back in here. Also, Netflix got its golden cross where the 50 crossed above the 200, and I tweeted about it, and it was down in like the 250s or anything like that, and it's definitely had a good run. So, but Netflix has been tricky lately. Be careful of IV when it comes up to earnings and getting IV crushed. But Netflix could definitely. You could be looking this as a big double top with bad earnings, or just if it's right here at resistance, just an absolute, smash right on through. Netflix does have this gap right down here, basically from 249 up to about 252. So it does have a $3 gap. With bad earnings, it absolutely could come down towards that range. So Netflix is going to be on watch with me, but like I said, with earnings, be careful of IV. Netflix contracts are freaking expensive, so just be careful with it. It's one that can absolutely get burnt, but it is coming up to some crucial levels. Nvidia, I talked about this one on Twitter quite a bit recently, where you had the big push down, and then it was kind of making this bear flag. I got crushed on puts. I bought some puts in this bear flag right here when it was looking like we were going to get the breakdown, and then you had this massive gap up. Now, what Nvidia is looking like is, so right here, last time you got a big push down is when it came up here and hit at 786 right at 160. So Nvidia is kind of in this symmetrical triangle right here. So where you got, bears are constantly pushing it down, bulls are constantly pushing it up. So you got a 50-50 battle. That's why these are 50-50 patterns. If it can break above right here, if it gets on top of this 786 to 160, it's pretty much just got a clear shot to fill its gap all the way up to 165. So this one has got a very nice setup, both for the bulls and the bears. So kind of the same thing. You want to look for, can it clear this 786, or is it going to kind of give me that M-shaped double top? Or if it does clear, if it starts pushing up, if it does gap up, then calls all the way up to the gap fill look like a really good solid play to me here. So that's kind of what I'd be looking for on Nvidia. For Tesla, I tweeted this out. This is a very macro picture, but Tesla essentially, ever since it, debuted, if you will, on the New York Stock Exchange, it's had this rising support where each time it's touched it, it's gotten some pretty big moves off of it. If you take a fib from the May lows to the all-time highs, then the 618, which is your most common retracement in fibs, brings it down to about 45, 46, right in that range, and it also would be a touch on that trend line. So if the overall market gets bad, Tesla's, there's been a lot of bad news. It's been beaten down to death lately. There's been a lot of bad news coming out as far as, having to lower prices. Now the argument there is, well, that means they're going to sell more cars, which I agree with that, but, they've got to sell more cars enough to make up, for the profit difference of when they were at a higher price. Also too, and this is looking at the weekly chart right now on Tesla. If the beat down that it has taken, you have had increased volume on this massive sell-off that has happened, and Elon's been dumping shares, and so it overall, I do think Tesla's going to be okay long term, but I think there could potentially be a lot of pain in this stock in the short term. Now, just like we see with any other stock, just like on the way up, it didn't go straight up. It's not going to go straight down either. So this is not like just buy a whole bunch of puts tomorrow and you're going to be golden. You're going to have, down and up and down and up and down and up. It would kind of be a walk down, and I think it would be, somewhat long and painful, potentially taking, the next 6 months to a year, even year and a half to play out. But it really just kind of depends on where it goes from here. Once again, big time macro look. And this is, that's a very bearish outlook, but I want to be clear. I'm a big fan of Tesla. I have a bunch of Tesla shares. And so but I'm also a realist. Like, I'm not going to tell you what you want to hear. I'm going to tell you what I think potentially could play out. Now, if you look at that same fib, it is finding a lot of support right here on this 382, which was, obviously, you had, you can just tell, you had basically a nice little falling wedge play out here that broke to the upside. So it is finding support here. So short term, you could push up to back, around 150 or so, I think is potentially likely, before a continued push down. Like I said, I would be surprised for it to just, completely go straight down. But once it breaks this 382 support, you definitely could see, some big moves to the downside. If we get in here and look a little closer, pretty much what I've been doing right now is just scalping puts out of this supply zone that Tesla has been creating. So basically from 122 to 124, been jumping in and out of puts. I tell my guys in the Discord, resistance is resistance till it's not, okay? So until Tesla proves that it can get over this 122, 124 range for me, then I'm going to treat it like it can. Okay, and so in teaching how to trade, supply and demand zones is what I do in my Discord. So right now, this is a great stock to be scalping puts out of, and you can see this is that 382. So this white line right here is that 382 that I just showed you on a more macro look. So you can obviously see where you're finding support. Now, the bad news would be, if you look, is so each time Tesla's come up here, it's making lower highs, and it's also making lower lows. Also, too, the volume push up each time it's come up into supply has been a lower push overall. So this, to me, overall, isn't giving a great look for Tesla overall. Like I said, this is somewhat of a bearish outlook, and you could kind of say that intraday. Once again, I'm just trying to do this somewhat quickly. This could be kind of like just a little bear flag right here before you dump back out. pretty similar to Tesla likes its bear flags, kind of similar to, this look right here, this look right here. So anytime you see, which I tweeted out today, anytime you see that price just kind of slowly rising, and it's and the volume is slowly decreasing, then you want to look at, potentially looking at that's a bearish signal. Now, the one that I tweeted out earlier today actually kind of played out, kind of didn't. So intraday, I was kind of looking at this one. And this is kind of what we were talking about in our Discord today, is where we're seeing a lot of this lately, where you've got like a really good bearish look. So you had this wedge right here where while it was in that wedge, volume was just tanking out the bottom. And then we got some nice momentum candles, and I got puts right here, and got the dump, and then all of a sudden it just pumps on you. So we're seeing a lot of these kind of fake outs and choppiness leading into CPI. So you just want to be real careful. You see that green, profit is profit. It always amazes me how many times, people, they'll go work an entire day at work for like $100, an entire day selling their soul, selling their life, for $100 a day at work. They'll make $100 on a trade in 15 minutes and they won't take profit on it. It just boggles my mind. So especially in this, choppy, I do think we're still in kind of that bear rally phase. So if you're trading in this phase, man, if you see profits, take it. Live to fight another day. Okay. So that's pretty much where I'm going to. Let's see here. Yeah, this video is right at about 20 minutes long. So that's pretty much where I'm going to leave it. If the memes continue running tomorrow, I promise you I'll get you a meme video out, because especially like GME, does have a nice candle today. AMC, it kind of regained this rising support, but it's really got to get back over that, $4.27 level right there. So, but if they keep running, things keep looking good. GME had a nice candle, but GME's really got to kind of clear this, 1950 range. So they definitely got some work ahead of them. But overall, if you made it to the end of the video, thank you so much. Once again, LaunchPass link to sign up for the Discord is going to be in the description. Thank you so much for taking the time out of your day to watch this video. I hope it's helpful to you. Please like, subscribe, all that good stuff. And until the next video, I promise you I will start getting more regular videos out. So if you like the way that I present things, please like and subscribe, tell your buddies about it. And until the next one, much love, my friends. Do what's best for you, yourself, your family, and your portfolio. Don't listen to me. Don't listen to anybody else on the internet. Do your own DD. Make great trades for yourself. And like I said, just too many people get caught up in the herd mentality. Do your own DD. Do what's best for you. Trade your plan. Have a good one, my friends.